Welcome to another Tracking Trends Thursday with Kristen Mason Coreas, owner of the Homes by Mason team. Today is December 11th. The year is almost over. Let's talk about what is happening. The Fed met this week and I think it was kind of, I don't know if it was 50-50, but we weren't sure what they were going to do, and they did end up dropping their rate. And usually, or rather often, when that happens, we do see when the Fed drops their rate a decrease in the mortgage interest rate. So we might see that. Now here, what we are seeing is the increase. So this does, though, reflect the week before. So I did not actually check in today with our lender partners to see if today they were seeing something different. But up until today, the weekly average was 6.22, which is a bit higher than last week and, however, lower than last year. And you can see here that that is still at the bottom end of what we've been seeing in the past year. So maybe next week we'll see those interest rates come down. And there was a slide that was in there that's not showing. Again, it was going to show you how much we were. I think we were at 6.6 last year. So pretty significantly down from where we were last year. And then what's happening in economic news is that, again, the Fed met and they are saying that their actions are not alone going to solve housing market struggles. They did touch on the fact that there is a freeze effect happening, impacting supply of listings on the market, because there are a lot of homeowners out there who have a very low interest rate who do not want to sell their homes and go buy something else because today's interest rates are significantly higher than where they were some time ago. When we were in the threes. And so that has had a lock-in effect for some owners, causing them to not want to sell. And so that is one issue impacting perhaps inventory and affordability, because we need more supply, significantly more supply than demand, in order to see prices come down. So now that said, active listings in November were nearly 13% higher than the year before. We have been seeing increasing inventory, but we're still not necessarily where we need to be in terms of a balanced market. Purchase applications did drop 2% for the week, but were 19% higher than the same week a year ago. Again, that interest rate was higher at the same time last year. So that lower interest rate does usually equate to more buyers applying for mortgage applications and writing contracts on homes. And then in terms of what's happening in the job market, jobless claims rose last week by the most since the start of the pandemic, highlighting some volatility in the labor market. And then our last point down here is, again, highlighting economic uncertainty, because job openings did rise in October, but there was weak hiring and a low quit rate. So basically what we're seeing in the job market is some volatility and some uncertainty there. So back to real estate and looking closer in at specifically the Mid-Atlantic region, new listings were up. However, this slide here actually does highlight for me and for you that, real estate can be different market by market. And even in our Mid-Atlantic region, you're going to see here that our market is performing differently than the Mid-Atlantic region. So new listings in the region's three major metro areas remained below last year's levels, even though they were higher in the other areas. And then same thing, contracts here, the highlight, right, was that contracts were under last year, but not in the Washington metro area. We had year-over-year gains in contracts. So again, the real estate market is not the same everywhere. It is really important to understand what is happening in your hyperlocal market, which is why we look at that always at the end to talk about what's happening specifically here in our area. And contract times are slowing. That is consistent and also relatively typical for this time in year. But the increase this year is larger than usual because supply is above 2024 levels. So in general, more inventory, more time to make a decision. So the larger DC metro area, when we are comparing to a week ago, we are comparing to the week of Thanksgiving. So this is the week ending December 7th, but the prior week was the week of Thanksgiving. So it makes sense that showings were up by 31% compared to the week of Thanksgiving. Contracts were up 14.5% compared to the week of Thanksgiving. And new listings were up 73.6% compared to the week of Thanksgiving. So all of those things make sense. And then we also take a look at, so compared to a year ago, what was happening. So compared to the same week last year, showings are actually down, interesting enough, by 2.6%, despite those interest rates being lower than they were. So that's a little bit surprising. Purchase contracts are up 3.1% compared to the same week last year. Time to contract, median time, 45 days, a month and a half, people. That is not going to last. In the new year, right, I expect to see that time frame shrink. So if you like to have breathing room when you're home shopping, now's a good time to be out there. So that's an increase of 7 days from last year, an increase of 5 days from last week. New listings up 1.6% compared to last year. Median list price still up year over year and week over week. So 1.4% higher than it was the same week last year, and 3.7%. Again, this time of year, usually prices would go down. But that's just a week over week figure. So it doesn't, and again, compared to the week of Thanksgiving. So not a big surprise there. And active listings up 32% compared to the year before. So we do have more listings, but still not as much as we really want. Hyperlocal area that we look at includes Arlington, Alexandria, Fairfax, and Falls Church. So specifically the areas where Homes by Mason does most of our business. So both inventory, and so this data is more current than the other data I share because we run it for ourselves week over week. So this goes up until Tuesday. So this does include, does it include Thanksgiving? No. So this is kind of well past Thanksgiving. So yes, this previous week was Thanksgiving. So Thanksgiving was a down week, which makes sense. And then this past week, we were above. So we have more listings and more contracts compared to last week in our hyperlocal area, and more than 50% you can see here in terms of increase in supply. And contracts also up by a healthy number. And so again, here you can tell compared to the week before, we had more listings and more contracts below what the average is for the year because we're in the slower season now. Compared to the year before, when we're looking at our hyperlocal market, so again, listings and contracts are both up compared to last year. Now, the other thing I really want to pay attention to is this demand to supply ratio. Those are the blue bars. So several weeks, you can see we've been above 100% demand to supply ratio for a number of weeks. This week, we are at 102.62%. And that compares to last year at the same time, we were at 112%. But being above 100% means that there were more contracts written than listings that came on the market. So then that does start to shrink inventory, right? And that, is going to, if we shrink inventory, then things get tighter, competition gets harder, prices may go up. So we may, again, eat into that supply of inventory that we have leading into next year, especially if interest rates do come down. So if you are a buyer or if you know someone who's a buyer, I would say now is a good time. End of year is often a really good time to get a bargain, and things will change every year. Historically, things change in the new year and the market activity picks up, buyer activity picks up in the new year. There will not typically, historically, be a lot of breathing room or elbow room, certainly not as much as you have right now. So these are days on market. The average days on market, I think we were at 47 last week, 41 still. Breathing room there. So that is your Tracking Trends Thursday for today, December 11th. Thank you for watching. And whenever you want to dig deeper on some of this stuff and talk about how it impacts you and your decisions, please reach out. 571-210-1866 is my number. Call me or text me there. You can email me at kristen@homesbymason.com. And there's a link here wherever you're watching this to get directly on my calendar if you want to do that. So thanks for watching and have a great weekend.